Hey, it's Patrick Moore with Ironclad Wealth Management here, and I've got a quick video today on life insurance and specifically life insurance for small business owners, how it's different, some things you may need to consider. So, this is a video that if you are a small business owner, great, this one's for you. If not, this might not be that much fun because we're talking about life insurance, which isn't fun in the first place. So, getting right into this, got some disclosures. Whenever we do projections, they're non guaranteed, things can change, and this is just kind of some general educational information. So, I always like to start when I talk about life insurance by kind of, diffusing some of the, we call it the bad press around life insurance, right? Because what is life insurance? At the end of the day, all life insurance is it's a math problem, okay? And specifically, it's the solution to the math problem of how much we need today to replace the financial loss that your family would experience if you pass away. Can't solve for the emotional, but we can solve for the financial. So when do small business owners need to solve that problem? Well, there's three key areas, and there's a lot more different areas, right? But these are the three ones I want to talk about today because I want to use them all as a subset of number one. Because number one is protecting your family. At the end of the day, life insurance is about protecting your family. If you don't have a family, you might not need life insurance. Now, there's two other things that come into play when you are a small business owner. The first is if you have a partner, you may need buy-sell insurance as part of a buy-sell agreement. And then finally, it is if you need to take a loan out, specifically an SBA loan, lenders will typically require that you do have life insurance so that they can get paid back if your business fails due to you passing away. So, what is the right amount of life insurance? This is what I want to focus on today because I think this is really what matters. And contrary to popular belief, and what almost every time I see and work with somebody is, it's not $1 million. All right, Dr. Evil may think it is, you may think it is, but when I see $1 million, my first thought is that's an arbitrary decision, right? You're like, hey, $1 million, even $2 million, even $3 million, it's just a number that sounds right. It's not a number that's actually attached to what your family needs. Because rather than asking how much life insurance you need, the better way to think about this is a series of questions. And these are just a few that I use. It's how much would you like to provide for your family on a yearly basis after you pass away? And that just needs to be a number. It can be tied to certain activities. It can just be your income, but that needs to be a number. Secondly, how many years would you like to provide that income? Once again, a number. Are you going to provide it through your retirement age? Are you going to assume your spouse is going to continue to save for retirement? Do you want to go ahead and fund retirement? Do you want to assume your spouse will go back to work? And if so, how much are they going to make? So if you're making $250,000 and your spouse isn't working today, well, if they go back and work for $50,000 or $60,000, that lowers how much financial burden is going to be on the family. And then do you want to pay off any debts? Do you want to prepay college? All of those are questions that by answering them, you can then put them in a calculator and figure out if it makes sense for you to buy insurance and how much you need to buy. Now, here's an example of what this looks like. And this is just a business owner earning $250,000 per year. And if we answer all those questions and answering those questions says, hey, I want $250,000 in income. I want it to last 20 years. That means that I need $4.2 million today to fund that $250,000 for 20 years. Now, on my end, I have a calculator that does all this for me, right? When I go in my planning software, I got my financial calculator as well. But if you look at the bottom of the slide, if you're answering those questions, this calculator right here is probably the best DIY calculator that I've found that kind of matches up with the ethos of answering, hey, what do I need? Not how much is this insurance. I'm going to show it to you real quick. Let me pull it over here. And what you can see now is you can see this life insurance needs calculator. So if you say, hey, I need $250,000 of income, we're going to do it for 20 years. We're not going to pay off any debt. We're not going to need any additional child care, which if your wife or your spouse, whoever it is, does go back to work, you may. We're going to set aside any money for an emergency fund. How much personal life insurance do you already have? Let's say 0. You can see that this is where that number on that slide came from. So it's a tool that I think in the DIY space is really good, and it'll help you answer those needs. So I just wanted to share that resource really quick. Now, something I glossed over is we were talking about the assets, right? How much money do you need today? Well, a lot of times what people will do is they'll include the assets they already have in the life insurance formula to figure out what they need. So in this scenario, on the far left, how much do you need today? Well, in that first example, it was 4.2 million. What you can do, and you don't have to do this, is you can include the assets you have to offset some of that need so you're not buying millions and millions of dollars of insurance. So you can subtract out your assets to arrive at the amount of insurance you need. And this is where things get a little more complicated for business owners because typically your largest asset is your business. And specifically, what's going to happen to that asset and the value of that asset if you pass away. Should you even include it in that formula? Will it continue to function if you pass away? Will sales go down? Will earnings go down? Who's going to step into the void? Is it your family member? Is it your spouse? Is it a kid? Is it a key manager, key employee who's been with you for 20 years? Those are all questions that if you don't know the answer to, the reality is your business may not be worth what you think it is in your head if something happens to you, which means you need to have more insurance to meet that need. So depending on the answers of this question, you may or may not need to include your business in that formula, in that calculation. So, when we look at the different variations of a business, let's talk about some of those real quick. So if we look at this is the same format I just showed you, $250,000 a year in income. I did an arbitrary number, which I just said we shouldn't do on solving the insurance, but I said, hey, let's say it's worth 4 times earnings or $1 million. And so if you include your business and the ability to sell it, you obviously need less insurance because then your family is going to have those sale proceeds to generate some of that income moving forward. But there's probably a good chance that your business may not get 100% of the value. Let's go over a couple of scenarios real quick. Let's say, for example, myself, I basically have a couple of people who work with me, but I'm the one who does most of the work at the business. For me, the reality is that my business does not have much residual value until I add more employees. So I'm probably not going to get much in the way of business value if my wife turns around and tries to sell it if I were to pass away. So I've got all of that insured. Now, if you have an organization with 20, 30, 40 employees, whatever it may be, that probably means that there's a couple of manager levels in there and somebody who kind of runs the operations for you. You probably have somebody where you'll be able to get the full value of your business. Once again, it's a generalization, right? But because you're going to have people who can pick up the slack and you're doing more strategic work. If you're somewhere in between, let's say you're at a 10-person firm, you've got 1 or 2 key people, there might be a little bit of loss because you're probably handling some key accounts. You're probably more involved in the weeds on a day-to-day basis. The reality is that doing that is probably going to reduce the value of your business, which once again will have an impact on how much insurance you need. So this is where things get complicated for business owners because another thing is it's going to take a little while to sell the business unless you have a ready-made buyer ready to go. Now, you could also, for the purposes of doing life insurance calculations, if you want to add other assets in here, this is where you would add it in that formula, right? This is just the assets tab. But once you find that need, this is step 2 to figuring out and determining how much insurance you need as a small business owner. And once again, this isn't too complicated. It just requires sitting down, thinking about it, and really thinking about it impartially, because no matter how much you love your business, the person who's going to be buying it from your family does not love it that much, and they're going to try and get the best price possible. Now, what if you have a partner? Another form of insurance I wanted to go over real quick is a buy-sell agreement. If you have a partner, what happens is you each own a policy on each other. And the good part is, whereas we're talking about somebody might try and not pay what a business is worth, in a buy-sell agreement, there's going to be a defined formula on how your business is valued, and it's going to require your partner to buy your shares from your family at that agreed upon price, which is sometimes funded by life insurance. So the 2 main benefits are your family gets the full value of the business, and it prevents your partner or you from having to go into business with somebody you never intended to go into business, which could be the spouse of your deceased partner. So it's just another form of insurance, and what it does in our kind of value calculation for how much your family needs is that if you have buy-sell insurance, it reduces how much your family needs on the personal level because they're going to, in a guaranteed fashion, get that buy-sell payment for the shares that you already have. So once again, you could add other assets in here as well. Now, in the final example is loan insurance. And by the way, that was a very quick overview of buy-sell insurance. That's really just there because I think it's something everybody should know when we're talking about how much your family gets. But I just wanted to give a brief overview because I could spend a lot more time just on buy-sell insurance. The final example is loan insurance. So by loan insurance, I mean, hey, if you go get an SBA loan, if you go get a note from your bank, whatever it may be, they're typically going to require that you insure that loan value so that if you pass away, they get paid back. The important thing to know about loan insurance is that it's just offsetting a liability. It's offsetting a debt, which means that the majority of that money is not going to go to your family. It'll prevent the bank from seizing your primary home. It'll prevent the bank from seizing your assets you pledged as collateral, which is going to be great for your family, but it's not going to solve for that insurance need because there's not going to be as much money going to your family. So whereas the other two do put money in your family's pocket, having a loan having life insurance that's collateralizing a loan doesn't actually put money in your family's pockets. Now, this was a quick overview. I'm looking at it. It looks like it was about 11 minutes, so a little longer than I would have liked. But there's tons of variations of life insurance, right? Term, whole life, universal life, variable universal life. I don't want you to focus on any of that. That's why I'm just now mentioning it. The most important thing you can do is focus on what your family needs. Ask the questions, the real impartial questions. Hey, what will my family need to basically live if something happens to me? And then you can work backwards into how much insurance you need rather than just going for that good old classic $1 million. So I hope that this helped. If you have any questions, we have an accompanying blog, and you can find us on our website, ironcladwm.com, and you can schedule a no-cost intro call if you like. So have a good rest of the day.